I don't think the Fed has done enough. We are going to see prices go up.
That is confidence. Okay, I am excited now. Hey guys, Krisha here. Please be cautious of any fake comments and emails you may receive from people pretending to be Mango Research. Sean and I will never, ever contact you for investment opportunities or anything of that sort. To get in touch with the real Mango team, make sure to join our official Discord chat using the link in the description below. Stay safe out there, and remember, do it Mango. And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and Matic analysis video. I have Sean with me today. Sean, say hi.
Good morning, everyone. Krisha, a lot of interesting things to talk about.
Yes, sirree. Particularly this, the Federal Reserve left rates near zero, right? Which was positive news. But we saw pullbacks, these odd pullbacks across the board. So we'll be talking about these odd pullbacks today. But before we get into the meat of that, guys, let me tell you what's on the agenda. Okay, we'll first be starting off with Bitcoin, and then we'll be getting on over to Matic. And why Matic? Because Matic won the popular vote. And it won by 1 vote, Sean.
Ooh.
The second one was Cardano.
Ooh.
The Cardano community is so strong. Absolutely love them.
They're always up there, eh? Like either top 2 or top 3.
Exactly. Always. Now, guys, if you want us to cover any altcoin that you are looking at, okay, anything at all, make sure to go ahead, pause the video. I promise we're not going anywhere. Get down to the comments section and tell us which altcoin you want us to cover. Alrighty, the popular vote wins. And hey, when you're scrolling back up, make sure to hit those likes. And if you haven't already subscribed, go ahead and subscribe to the channel, because that lets us know whether or not you guys are liking this content.
Indeed.
All right, so Sean, are you ready to get into the meat? Much to talk about today.
Yep, let's do it.
Cool beans. The Federal Reserve left rates near zero, but it said it would tiptoe closer to reducing its mass bond purchases, among other optimistic tweaks. So yeah, let's stick to the simple line there. The Federal Reserve left rates near zero. Now, Sean, yesterday you spoke about the 2 possible outcomes that this meeting could have.
Yeah.
Right? The Fed could be leaning dovish, which was good for the bulls, right?
Yep.
Because essentially the Fed would let inflation run hot. And the other side was hawkish.
Yeah.
But it was weird because we saw pullbacks across the board. Now, I'm looking at this news as dovish, good for the bulls,
Yeah.
right? But we saw pullbacks on the S&P, we saw pullbacks on NASDAQ, we saw a pullback on Bitcoin. So what sort of led to that when the news was positive?
Okay, and this is actually a really good question and very important for us to tackle. And we were talking about this on the Discord. I believe it was only last week, like around 5 days ago. So again, if you guys aren't in our live Discord chat, make sure to join. So essentially, let me just find the US 10-year chart. Essentially, here's the thing. The Fed can always posture to be hawkish while positioning themselves to be bullish. Okay, and that is a concept that is hard for people to wrap their minds around. And to be able to fully understand that, you need to understand that the Fed has essentially two main jobs, right? They have 2 things that they need to be looking after at all times. The first one is essentially employment, right? Okay. They want to keep employment rates up at all times, okay? They want to keep it nice and healthy. They want the US market to always be employed and working and earning a good living, etc., right? Makes sense. The other thing that they have to be concerned about and keep an eye out for all times is inflation. They want to keep this under control. They do not want inflation to get out of control, right? Going into a hyperinflationary market is bad. Now, here's the thing. There are going to be market environments where they can't have both of these at the same time. One has to give for the other to be successful, right? So, for example, for them to control inflation, what do they need to do? They need to increase interest rates, right? They need to up interest rates. Like the yield chart over here needs to go up. But if interest rates go up, well, that does really bad for the corporate sector. Those guys are going to have to cut jobs because, again, they are relying on being able to borrow money at low rates to be able to facilitate their operations, right? But if interest rates go up, they're going to have cutbacks. So that affects employment. So there's a delicate balance between keeping employment up and keeping inflation under control as well. So how does the Fed, especially now, after COVID, after such a massive crisis that the world had to undergo, global crisis, how does the Fed manage this balance? Well, we talked about this in the Discord. We said that what they can do and what they are probably going to do is they're going to posture in a way where they're going to indicate that they're going to be increasing interest rates to let the market get a little spooked. I call that pruning the flames. Essentially, they will keep the short-term to mid-term inflation under control, while their real goal is to let the economy run healthily, right? And essentially, in reality, let inflation run hot. Because the truth is, guys, and the Fed had said this, I believe it was a year ago now, that their mandate is now to let inflation on average be 2%. Remember, guys, before their mandate was, hey, we're going to be targeting a 2% inflation rate. That's a big difference from an average of 2% inflation rate.
Right.
Think about that. An average of 2% means that there are going to be times where they can let inflation run all the way up to 5%. And then they let inflation come all the way down to 1%. And then they'll have their average of around 2%, right? So again, there's a delicate balance over here. And what I think the Fed did was they postured for hawkishness by saying what? They essentially said, hey, we will be looking to increase interest rates in 2023. Okay, around 2 hikes of interest rates in 2023. Now, this was a surprise to the market because they were expecting interest rates to only increase in 2024. And that 1 year difference was enough to get the market spooked. Now, I think that the market was expecting far too much dovishness and no indication of hawkishness whatsoever from the Fed, which is far too unrealistic in my opinion. And they were positioned, and we talked about this in yesterday's video. For those of you who missed yesterday's video, go ahead and watch it. They were positioned across markets for the Fed to come out with only dovishness and no indication of wanting to control the inflation at all. Even though CPI came in at 4.9%, there was no way they were going to indicate nothing at all in terms of, we are looking at the interest rates. Okay, we are not being completely blind to that idea. For example, Paul Jones again, right, in a very, very recent interview said that the Fed needs to do something. They need to do something. But at the same time, in yesterday's video, we talked about that there's a difference between short-term traders who are going to be positioning themselves for an immediate move versus long-term traders who are going to be watching and saying, hey, even if we do get a pullback, I don't believe that the Fed did enough. And in my opinion, the Fed did not do enough to warrant any relief in people concerned about inflation.
Right. So this is what you mean by they just postured hawkish, but the real move was a dovish move.
Yeah. The real move is still allowing inflation to run hot because, again, they are not decreasing their bond purchasing. Okay, I'm going to go back to the article over here. And this part, right? This part that a lot of people might be getting confused on. It says, but it said that it would tiptoe closer to reducing its mass bond purchases. What does this mean, essentially? Well, the Fed is buying a lot of bonds every month, billions and billions of dollars, I think hundreds of billions of dollars of bonds every month. I'm forgetting the exact number, 50 billion? Forgetting the exact number, it's irrelevant. It's a big number and they're buying it every month, right? If they are buying bonds, remember, bonds affect yields inversely, right?
Right.
If the bond prices go up, yields stay down.
Correct.
This sentence alone, right, them saying, hey, we're going to be looking to reduce bond purchasing, right, was enough to scare the market. They're not doing it. They were looking to do it. He even said, take this with a large grain of salt. Okay? All of these words to me, right, all this Fed speak to me is posturing, right? Posturing, because in my opinion, they cannot increase rates this year. At the very least this year, they may actually do it sooner than people think, maybe late 2022 instead of 2023, or they may never do it if they trap themselves hard enough, right? At this point, they'd be shooting themselves in the foot. So they had to posture in one direction to not let inflation get out of control, because inflation expectations means more. People expecting inflation, by the way, the psychology of the market expecting inflation can cause rapid inflation. So the posturing of, hey, we are keeping it under check, will keep the market under check, because the market won't position themselves, right, to get too bullish or buy everything under the sun.
Okay.
So, yeah, apologies for the rant.
No, this was a good rant, right? Because, I mean, what the Fed said here was very, very important, and it is going to affect price in various ways. Now, yes, we did see a pullback, leading up to this meeting and even after. But if now we get on over to Bitcoin's chart, Sean, now we saw that Bitcoin actually did take that pullback. Let's go ahead and pull up some key technicals.
Actually, keep it on this chart, because this is really important. We were talking about this chart, I believe, just the weekend, right? This is literally the same drawing that we had over the weekend. We drew in these horizontals coming in from this high over here and this candle close over here, and we found, hey, what do you know? It's lining up beautifully,
right,
with the 200 MA and the 200 exponential. In fact, now it's like perfect. Then we had also drawn this pattern over here, right, Krisha? Do you remember?
Right.
And we talked about how it would be completely fine, right, and expected to see a rejection over here of the 200 exponential moving average, or essentially the zone, right? And us come to retest this falling channel. Now, what would have been bad is if we broke into the falling channel, or if we lost these candle close highs over here at 37,300-ish. But thus far, we are holding that trend line and that horizontal. So we're holding this as a potential high low before we see some possible continuation. Now the question over here is, was that move from the Fed, okay, this meeting from the Fed, is it going to be looked at as, hey, this is not enough, I think we're going to be seeing inflation, so I'm going to position for inflation? So if the market thinks that the Fed has not done enough and they're expecting inflation, well, they're going to be positioning in equities, in Bitcoin, and we likely see this as a we're likely going to see this as a higher low before continuation towards the upside. If we break down underneath here and further downside, and we see the same moves across all other markets, well, that's going to be an indication to us that the market participants are saying that, you know what, we are expecting the Fed to actually tighten, and we don't like this reaction. We rather get out of our risk assets.
I want to pull up this the 21 EMA that's coming in as underlining support right now. Just based on what they said, I think I'm leaning more bullish on the short-term prospects for
the midterm,
Bitcoin.
or do you mean actual short-term?
Short to midterm, because they only look towards tightening in 2023.
Yeah, that's
right.
True. Yeah,
and we know how these markets can run fast.
Yeah.
Right. So at this point, I'll be looking for Bitcoin to put in the next higher low.
And then we're sitting on the daily 21 EMA there too, which is lining up perfectly with that falling channel. So
right. So let's see if, like what Sean had mentioned, if we start breaking back down into this falling channel that we had, that I'm saying further down, we come likely going to test these lows right here at $33,000. Okay, so we're looking at these candle body closes. Breaking that would send Bitcoin cascading. Sean, my targets are at 27K. What are your targets at?
25,000 round number.
Okay. So
I'll be looking to 25,000. I think we'll at least wick over there. If we get anywhere near 26,000, which would be a candle close target, I completely agree. But I think a wick down to 25,000 would be more likely than not, right?
Right.
So candle close above your zone.
So right now I believe that we're in a squeeze situation. 21,200 right above us, the 200 EMA as well as the 200 simple moving average. I think the upside targets pretty much stay the same, right? Also, just I want to give a brief sort of overview on where this measured move takes us up to. I mean, we do have an official break on the channel. So if I just place it right here, the measured move takes us up to 44.5K, which, if I'm not wrong, I believe lines up with the weekly 21 EMA. I think we had gone over that yesterday. Yes. Now, I'm trying to keep this very simple for myself. It really, in terms of upside targets, is that I'm looking at the weekly 21 EMA. It's actually not at 45K. It's sitting here smack where we have the 4-hour 200 simple moving average. The daily 200 simple moving average, which comes in at 42,766. I'm looking at that going all the way up to the Tenkin. Now, the Tenkin, guys, comes in here at around 47.4K. I still stick to my same targets, and that we start getting up over 47K, the bulls are taking over. The bulls are going to be taking over from there. So that is the most critical level I will be looking at.
Yep.
What about you, Sean?
Yeah, no, I completely agree. So pertaining to midterm to long term, how we play this, nothing has changed, right? I've been keeping it really simple, and honestly, if you guys had simply done that, looked at the 4-day, there are a few things that we're looking at, and all of that still holds true. I'm just going to go ahead and hide everything for a quick second, Krisha. Looking at the Ichimoku, we have closed over the Kijun. We are looking at the bulls trying to defend that at the moment with this most recent Fed news and all markets taking a pullback onto critical levels like the 4-day Kijun. We are seeing them hold, right? So the midterm traders and long-term traders are saying, hey, we think that this Fed news is just a knee-jerk reaction, just an opportunity for us to either load up on our positions more or get into position if we are not in position. And it seems like we're seeing a bid over there, right? So the 4-day Kijun is being defended, but at the same time, I've been using the dynamic as my proxy, right, as my guiding light. And over here, you can see that we still have overhead resistance wicked right on to the top of the dynamic range over there. And until we cross above this region over here, I won't be looking for my next range trade, and that's coming in at around 41,000-ish, right? So 41,000-ish. I want to see a 4-day candle close. Speaking of defense, Krisha, I am eyeing something in particular. Let me just go ahead and clear the chart completely right over here. So we have an empty chart. I'm looking at the weekly right now, and what I'm going to do is I'm going to mark out a horizontal, all right over here. And what I'm going to do is I'm going to thicken this horizontal, mostly because I want a zone, but the zone is really thin. What I'm trying to do is mark out this candle high, so last week's high, along with the candle close. Okay, now I think what's going on at the moment on this daily candle is a battle between the bulls and the bears to defend those candle close highs and those candle close and that candle high, right? So last week's high, and that may actually line up with our ascending triangle. So something like that, right? I think if the bulls manage to close above this zone over here for the daily, well, we would have reclaimed the weekly close and the weekly high.
Right, and we can see that price is ticking up as we speak. So for now, we'll have to sort of wait and watch as to where the weekly closes. I believe we close today's a Thursday, so we still have about 3-4 days left on this candle, right, before we get a verdict on that. But no, this is what Bitcoin is doing. For me, short to midterm, I am leaning bullish just based on what the Fed said. Ultimately, I believe it comes down to supply-demand economics.
I believe Michael Saylor is completely right, and that anything underneath 3% is going to be looked at by the rest of the market as this is not enough, and that more and more people are going to be positioning in Bitcoin.
Yes, sirree. Alrighty, so you guys have our thoughts on this. Let us know what you guys think about what the Fed said in the comments section. I would love to get everyone's sort of views on, on what happened there and how you guys are perceiving the news. Now, Sean, how about we start getting into the altcoin for the day, Matic. Now remember guys, if you want your coin to be covered in tomorrow's video, go ahead, pause the video right now, get down to the comments section and tell us which altcoin you want us to cover. Okay, the popular vote wins. Now that said, let's jump in. So here we have Matic USDT on the daily time frame. I think let's start off with the weekly. The weekly is always going to be key, those higher time frames, and damn, this is looking like a nice bull flag. At the very least, I'm looking at the structure here, Sean, which is the series of higher lows that we're seeing on Matic. So far, it's looking like a squeeze-like situation. It's a fight between the bulls and the bears. Wonder what we're doing against our cloud levels, and what do you know? So we have the 21 EMA that Matic never really lost. In addition to that, guys, we also have the Tenkin and the Kijun that are almost just sitting there at around $1.36, almost converging. Okay, so honestly, I think this picture is looking good. Okay, so far, I believe that they've on the macro, it's looking good, but there's a fight between the bulls and the bears that's happening on the lower time frames right now. And depending on which side price action really swings on, that is really going to set the tone. For as long as we live over the Tenkin and the Kijun there, I think that the bulls stand a chance to actually take this baby to the upside. However, if we actually start breaking that Tenkin and the Kijun, which lines up at $1.36, I'm saying further down we go. The first test is going to come in at the 21 EMA, which lines up at around 86 cents. What are your thoughts on the weekly time frame, Sean?
Pretty much the same. I think that high low that you marked out there with the yellow arrow is going to be really important as well. So I think that's going to be the first test. And if we do even tick underneath that high low, I think we'll be coming to test the 21 EMA.
So you're looking at this candle right here, right? So the lowest point on this comes in at $1.16. So you're saying even if we tick below $1.16, there's a good chance that we come down further.
Yeah, so think about it. You've marked that out as a high low at the moment, right?
Correct.
But it's not confirmed just yet. So as soon as we tick underneath there, well, that's no longer a high low. And the bulls have lost that thesis that, hey, we are hunting for a higher low at that $1.36 mark, I believe. What is it?
$1.16.
Yeah, so $1.16. So at the moment, the bulls are trying to ensure that that low over there is their higher low going into the next uptrend.
Right. Okay, so Matic on the weekly, guys, looks bullish, but let's get on over to the daily because I'm sure the daily is screaming squeeze, and it is. In fact, you can sort of draw out almost like a, you can look at it as a symmetrical triangle. Right, there you go. We just have to mark out the series of, well, lower highs and higher lows, and you get the squeeze right there. So it's pretty much giving you your boundaries for the bulls and the bears.
Mm-hmm.
We start taking out the Tenkin as well as the top of the cloud there. I'm saying that the bulls have control.
It looks like it has to make a move soon, eh?
Right.
Either that or it's going to chop into either direction.
Look at that.
That 10 SMA holding. Yeah, it's really squeezing over there.
So, yeah, watch out for how, honestly, price reacts off of your topmost resistance coming in at, let's look at the top of the cloud here at $1.60, going all the way down to, I'm going to take the wick low at $1.16, right? I believe it's this right here.
Yeah. So there you go, lines up, right? Lines up with your squeeze too.
Exactly.
What we talked about in the weekly time frame.
So we start breaking $1.16, further down we go. Likely 21 EMA is going to be the first test at around 85 cents. If we start breaking to the upside, however, Sean, where do you think this baby's going to
go? So I want to see 2 daily candle closes above the cloud and above this flat line here next. Right here, this flat of the Tenkin is going to be important, right? And then if we start seeing us be above the cloud, above the Tenkin, above the Kijun, and the 10 SMA angling up aggressively as well, I don't want to see the 10 SMA going flat, all right? I want to see the 10 SMA angling like this. That would essentially mean that trend momentum is also picking up. I'd then be looking towards these candle close highs over here at around $2.50.
Yeah, I think so too. So essentially, it's look for that trend to be established on the daily time frame. So far, I think we're ranging on the daily. So for as long as we're ranging, I think, you know, either side could take over. But as soon as we start establishing a trend, that could give you the first tip off on that the bulls are likely going to take over. But
let's take a look at the 12-hour.
Alrighty. So we have, let me just clear out some of the lines here. Getting met SC.
Apologies for that. I like to scribble. So what are your thoughts, Krish? I don't really see much other than we are fighting to retake the 21 EMA, held the cloud over there as well, but we're still underneath the Kijun, so we still have the bearish TK cross, looking more neutral over here, lines up with your symmetrical triangle thesis actually, so...
Right, we're likely going to get that cross. It's going to be a bullish cross between the 10 SMA and the 21 EMA, but ultimately I'm going to be giving, you know, precedence to the structure. If this, so we're seeing a low being set in here, this could be the next low that gets set in. So I want to see the bulls actually start taking out these highs, if anything. So I'll be looking for, at least on the 12-hour time frame, for the bulls to push price up past the Kijun.
Yeah.
Okay, the Kijun comes in at $1.72. Remember what we're looking for. Structure is going to be key. We're looking for that trend. Look for the trend.
Yeah.
Now, Sean, before we wrap up, do you have any final thoughts on Matic, or hell, even on the Fed and Bitcoin?
I don't think the Fed has done enough. We are going to see prices go up.
That is confidence. Okay, I am excited now. Now, guys, this is all we have for you for today. If you have any thoughts, leave them in the comment section below. And hey, if you have any altcoin that you want us to cover in tomorrow's video, make sure to mention that in the comments section as well. With this, guys, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao.